Before we begin, please note that the information provided in this video is for general informational and educational purposes only, and is not a substitute for professional financial or insurance advice. The content of this presentation is not intended to be a recommendation to purchase any specific product or service. You should always consult with a licensed and qualified professional before making any decisions about your insurance coverage. Your individual needs and circumstances may vary, and the options discussed may not be suitable for everyone. There's a secret: the auto insurance industry spends billions of dollars a year to keep you from ever figuring out, and it costs the average American family over $400 every single year. It's not a secret about driving records or credit scores, or the type of car you own. It's a secret about people, specifically the person you buy your policy from. Let me tell you about a friend of mine. We'll call him David. David is the ideal customer. Perfect driving record, never had an accident, never even gotten a speeding ticket. For 10 years he was with the same big-name insurance company, you know, the one you see their ads during every football game. He was loyal. He paid his bill on time every time. And every 6 months, like clockwork, his premium would creep up. Just a little bit. $5 here, $10 there. When he'd call his agent, the friendly guy whose face was on a billboard in his town, he'd get the same rehearsed lines. "Oh, that's just inflation," or "rates are going up for everyone in your area." David trusted him. Why wouldn't he? This was his agent, the guy who was supposed to be looking out for him. Then one day at a barbecue, David was talking to a coworker who had a similar car, lived in the same zip code, but had 2 speeding tickets and a fender bender on his record. Out of curiosity, David asked what he paid for insurance. The number was so low it made David's jaw drop. He was paying almost $600 a year less than David, with a worse driving record. How is that even possible? David made a mistake. A fundamental error that millions of us make because we're taught to. He put his trust in the wrong person. He didn't realize that the agent he was so loyal to had a dirty little secret. His legal and financial loyalty was never to David. It was to the giant corporation he worked for. In this video, I am going to pull back the curtain on the entire auto insurance industry. We are going to expose the critical, game-changing difference between an insurance agent and an insurance broker. By the time you're done watching this, you will not only understand who you should be talking to, but you'll have a bulletproof strategy to ensure you are getting the absolute best coverage for the lowest possible price. This isn't about finding a few extra discounts. This is about fundamentally changing the way you buy insurance to potentially save you thousands of dollars over the next few years. This is the information the big companies hope you never find. So what's the big secret? It's simple. The entire industry is split into 2 teams, Team A and Team B. But here's the problem. They both call themselves insurance agents. They use the same language, they make the same promises, but their business models are polar opposites. And one of them is built from the ground up to serve the insurance company, not you. Let's start with the most common one, the one you see everywhere. This is the captive agent. A captive agent works for one and only one insurance company. Think State Farm, Allstate, Farmers, Geico. When you walk into a State Farm office, that agent is a direct employee or a contractor for State Farm. They are, in a word, captive. Their job is to sell you State Farm products. That's it. They can't offer you a policy from Progressive. They can't check to see if Geico has a better rate for you. Their entire professional universe is confined to the products their single employer provides. Think of it like this. A captive agent is a Coca-Cola salesman. You walk up to his stand and say, "I'm looking for the best soft drink. What are your options?" He can sell you a classic Coke, a Diet Coke, or maybe a Coke Zero. He's an expert on Coca-Cola. He knows every ingredient, every promotion, every bottle size. He can tell you exactly why Coke is the best choice. But what he can never ever do is tell you that maybe, just maybe, the Pepsi on sale across the street is a better deal or a better fit for your taste. Why? Because he doesn't work for you, the thirsty customer. He works for Coca-Cola. His paycheck, his bonuses, his career advancement, it's all tied to how much Coca-Cola he sells. He is fundamentally biased. His loyalty is to the brand, not to the buyer. This is the exact model of a captive insurance agent. They are experts on their one company's products. They can be incredibly knowledgeable, friendly, and helpful within the confines of their brand. But when your rates go up, their only solution is to see if they can tweak your existing policy with their company. They can't do the single most powerful thing a consumer can do: shop the market. They are a one-trick pony in a multi-trillion-dollar circus. Now let's talk about the other team. This is the independent agent, or more accurately, the insurance broker. These individuals are the polar opposite of a captive agent. They don't work for any single insurance company. Instead, they work for you. They are appointed to represent multiple, sometimes dozens, of different insurance companies. Progressive, Travelers, The Hartford, Safeco, and many others you've probably never even heard of. Let's go back to our soda analogy. An insurance broker is like a professional soda shopper. You go to them and say, "I want a 12-ounce, zero sugar, caffeinated cola, and I want the best possible price." Their job isn't to push one brand. Their job is to go out into the entire marketplace and check the prices and products from Coca-Cola, Pepsi, Dr. Pepper, RC Cola, and even the store brands. They take your specific needs and then find the company that offers the best product for the best price. Their loyalty isn't to a single soda maker. Their loyalty is to you, the client who hired them to find the best deal. This is the power of a true independent broker. When you ask them for an auto insurance quote, they take your information and submit it to a whole range of different carriers. One company might be best for drivers with a perfect record. Another might specialize in families with teen drivers. A third might offer huge discounts for bundling home and auto. The broker's job is to navigate this complex market on your behalf. They make the insurance companies compete for your business. A captive agent makes you take whatever their one company is willing to offer. Completely flips the power dynamic. So it seems obvious, right? Everyone should just use a broker. But here's where the industry gets clever, and where millions of people get confused and end up overpaying. The lines can be blurry. Some professionals call themselves independent, but may still have incentives to push one carrier over another. The real secret, the one word that separates the good from the great, is understanding who has a fiduciary responsibility to act in your best interest. That concept, fiduciary duty, is the key to everything. It's a legal and ethical obligation to put your client's interests ahead of your own. And knowing how to determine who truly operates under that principle is the difference between being a victim of the system and being the master of it. So, how do you tell the difference? How do you know if you're talking to a Coca-Cola salesman or a personal shopper? Over the course of this video, we're going to dissect this. First, we're going to dive even deeper into the world of the captive agent, exposing the psychological tactics and marketing language they use to create a sense of loyalty that often costs you money. Then we will arm you with the specific, pointed questions you must ask anyone you're considering working with to instantly reveal where their true loyalties lie. Finally, I'll give you a simple, actionable checklist you can use today to review your own policy and start the process of finding the right professional, ensuring you never leave another dollar on the table again. This is your masterclass in navigating the auto insurance market. Let's get started. To understand the difference between an agent and a broker, let's start with a story. Imagine two neighbors, Mike and Jessica. They live on the same street, drive similar cars, and have nearly identical driving records. One icy morning, they both get into separate, minor fender benders. No one's hurt, but both cars need repairs. Mike calls the number on his insurance card. He's put on hold, transferred twice, and finally speaks to a claims adjuster who sounds like they're reading from a script. He has to explain his situation from the beginning to each new person. The process is slow, confusing, and impersonal. He feels like a number in a massive system. His claim takes weeks to get approved, and the payout barely covers the cost at a body shop he was forced to use. Jessica, on the other hand, makes one phone call. Not to a generic 800 number, but to her insurance professional. This person already knows her policy, and immediately takes charge. They walk her through the exact steps, handle the communication with the insurance company, and advocate on her behalf to make sure the claim is processed quickly and fairly. She gets her car fixed at her preferred shop, and the entire experience, while not pleasant, is manageable. She feels supported. What was the difference? It wasn't the insurance company. It wasn't the policy. It was the person she chose to buy the policy from. Mike went with a captive agent from a big-name company he saw on TV. Jessica used an insurance broker. And that single choice, made months or even years earlier, completely changed the outcome of her bad day. This is the core of what we're talking about. The distinction between an agent and a broker isn't just industry jargon. It's the fundamental difference between having a salesperson and having an advocate. It all comes down to one simple question: who do they work for? Let's break down the players on the field. First, you have the most common type of insurance professional, the one most of us are familiar with, the captive agent. Think of a captive agent like a player on a professional sports team. They wear the jersey, logo, and colors of one team, and one team only. A State Farm agent sells State Farm. A Farmers agent sells Farmers. An Allstate agent sells Allstate. Their allegiance is to their company. They are a direct employee or an exclusive contractor for that single insurance carrier. Now, this isn't necessarily a bad thing. The major advantage of a captive agent is that they are absolute experts on their company's products. They know every endorsement, every discount, every loophole, and every guideline for that one carrier inside and out. They can navigate their company's internal systems with their eyes closed. If you have a complex situation that fits perfectly within what their company offers, they can be incredibly efficient. For example, if you want to bundle your home, auto, and life insurance, and their company offers the best multi-policy discount in the state, that captive agent can put together a package that's seamless and potentially very competitive. But the downside is baked right into the name. They are captive. Their toolbox only contains the tools given to them by their one employer. If your driving record has a small blemish, and their company is particularly harsh on that specific type of infraction, they can't offer you a policy from a competitor who might not care about it. If another company releases a new, innovative coverage that's perfect for you, they can't sell it to you. Their solution to every problem must, by definition, be a product from their company's shelf. They are selling you what they have, not necessarily what is best for you in the entire market. Their goal is to fit you into one of their boxes, not to find the best box for you wherever it may be. This brings us to the second player, the independent agent. This is where things get a little more confusing for most people because on the surface they look a lot like a broker. An independent agent isn't captive to a single company. Instead, they have appointments or contracts to sell insurance for multiple different carriers. They might be able to quote you a policy from Progressive, Travelers, and Nationwide, all from their one office. This is a clear step up in terms of options. The independent agent has a bigger toolbox than the captive agent. If you have that blemish on your record, they can check with several different companies to see which one is the most forgiving, potentially saving you a significant amount of money. They can compare the rates and basic coverages of the handful of companies they represent, giving you a sense of the market. It feels like you're getting an unbiased look at your options. But here is the critical, often misunderstood distinction. An independent agent, despite representing multiple companies, still works for the insurance companies. Their legal and contractual obligation is to the carrier, not to you. They are an agent of the company. The company pays them a commission to bring in business. While they offer more choice, their universe is still limited to only those companies they have an appointment with. And their primary duty is to serve the interests of those carriers. They are essentially a multi-brand salesperson rather than a single-brand salesperson. They're not a personal shopper. They're a sales associate at a department store that carries several different brands. They can show you the Nike, Adidas, and Reebok shoes they have in stock, but they can't sell you the New Balance shoes from the store across the street, even if they're a better fit for your feet. Now let's talk about the third player, the one that completely changes the game: the insurance broker. A broker operates on a fundamentally different principle. An insurance broker works for you, the client. Their primary allegiance, their legal and ethical duty, is to represent your best interests. They are not agents of the insurance company. Instead, you hire them to be your agent in the marketplace. Think of it this way. A broker is your personal professional shopper for insurance. You tell them what you need, what your budget is, and what your risks are. They then go out into the entire market, not just a handful of companies they have a contract with, to find the policy that is the absolute best fit for you. Their job isn't to sell you a product from a specific carrier. Their job is to find the right solution for your problem. They are carrier agnostic. They don't wear any team's jersey because they are the coach for your team. This shift in allegiance is the single most important concept to grasp. When you have a claim like Jessica in our story, a broker is your advocate. They are on your side of the table, fighting for you because you are their client. The insurance company is just the vendor they selected on your behalf. An agent, whether captive or independent, is on the other side of the table. They have to balance your needs with the needs and rules of the insurance company they represent. At the end of the day, their paycheck is signed by the carrier, and that is where their ultimate loyalty must lie. So let's recap the battle lines. The captive agent, an expert in one company, but with zero other options. The independent agent provides more choice from a pre-selected menu of companies, but still works for those companies. And the broker works directly for you, with the freedom to search the entire market to serve your best interests. Understanding this difference in who works for whom is the first and most crucial step. It's the foundation upon which your entire insurance strategy is built. It dictates the advice you get, the options you see, and the support you receive when things go wrong. Now, the obvious next question is, okay, that sounds great, but what's the catch? A personal shopper sounds expensive. Is a broker more expensive? How do all these people get paid? And how does that affect the price I pay for my policy? You might assume that more choice or better service automatically means a higher price tag. But the way money flows in the insurance world is not what you think. The commission structures, the hidden incentives, and who actually pays for the service will likely surprise you, and in some cases it might even shock you. And understanding that is the key to not just getting better service, but also to unlocking the absolute best price. Let's pull back the curtain, because the way money flows in the insurance world is one of the most misunderstood parts of the entire industry. It's a system designed to be opaque, a labyrinth of commissions, bonuses, and back-end deals that directly influence the advice you get. And it all starts with a simple fundamental question. When you buy a policy, where does your money actually go? First, let's look at the captive agent. The one with the familiar logo on their door, your State Farms, your Allstates, your Farmers. When you walk into that office and sign up for a policy, that agent gets paid a commission. That's no surprise. But here's the first layer of the onion most people never peel back. That commission is not a simple, flat fee. It's heavily weighted towards new business. An agent might earn, say, a 15% commission on the first year of your policy, but when you renew that same policy next year, that commission might drop to just 7% or 5% or even less. What does that incentive structure create? It creates a hunger for new blood. The system is designed to reward the hunter, the agent who is constantly bringing new customers through the door. Servicing existing clients, while important, is far less lucrative. This is why you might feel like you get the royal treatment when you're signing up, but when you need help a year later, the service feels different. The financial incentive has shifted. The agent's most profitable move is to be on the phone with a new prospect, not necessarily spending an hour walking you through a minor policy change. But that's just the tip of the iceberg. The real bombshell, the part that creates a deep and often invisible conflict of interest, is something called profit sharing, or a contingency bonus. At the end of the year, the insurance company looks at the agent's entire portfolio of clients, their book of business. They run the numbers. They look at how much premium all those clients paid in versus how much the company had to pay out in claims. If the agent's clients were profitable, meaning they paid their premiums and didn't file many claims, the company rewards that agent with a massive bonus. This bonus can be tens of thousands, even hundreds of thousands of dollars. It can literally be more than their entire commission income for the year. Now think about what that means for you. Let's say you get into a small fender bender. The damage is about $1,000, just a little over your $500 deductible. You do the logical thing, you call your trusted agent for advice. You ask, should I file this claim? What is going through that agent's mind in that exact moment? Of course, they're thinking about your rates going up, and that's a legitimate concern. But they are also, undeniably, thinking about their own bottom line. They're thinking about that year-end bonus. Your $1,000 claim isn't just a $1,000 claim to the insurance company. It's a black mark on the agent's profitability report. Enough little claims like yours from their other clients and that giant bonus check vaporizes. So, when the agent advises you, it might be better to just handle this out of pocket to protect your good driver discount. Are they giving you that advice solely for your benefit? Or are they also protecting their own income? The system creates a direct financial incentive for the agent to discourage you from using the very product you paid for. They are, in a very real sense, serving two masters, you, the client, and the single insurance company that signs their bonus checks. And when push comes to shove, the master who controls their livelihood often gets the final say. Okay, so what about the independent agent or broker? They must be different, right? They work for you, not the insurance company. Well, yes and no. It's more complicated. The first thing to know is that you, the customer, do not pay the broker directly. Their service is, from your perspective, free. Just like the captive agent, the broker is paid a commission by the insurance company they place your policy with. So when they present you with quotes from Progressive, Travelers, and Nationwide, and you choose Travelers, it's Travelers that sends the broker a check. This already introduces a subtle bias. Let's say Progressive offers a 15% commission, but Travelers only offers 12%. For a $2,000 annual policy, that's a difference of $60 in the broker's pocket. Now, a good ethical broker will always present the best option for the client, regardless of the commission. But the temptation is there. The system allows for a scenario where the broker might emphasize the benefits of the higher-paying policy, steering you in a direction that's better for them, not necessarily for you. And it gets deeper, because independent agents and brokers have their own version of the big bonus scheme. It's also called a contingency bonus or profit sharing. Insurance companies want to attract the best brokers, the ones who bring them a high volume of profitable business. So they create bonus programs. If a broker sends a company, say $1 million in premium in a year, and that block of business is highly profitable, low claims, that company will cut the brokerage a massive check at the end of the year. This creates a system of favorite companies. A brokerage might have a very lucrative bonus agreement with Safeco, for example. So they have a powerful incentive to send as much business as possible to Safeco to hit their volume targets and secure that bonus. Does that mean the quote they give you from Safeco is bad? Not at all. It might be a great option, but are you truly seeing the full picture of the market? Or are you seeing a curated list of options from companies that the brokerage has the coziest financial relationships with? The broker isn't tied to one company like a captive agent, but they are still tied to a system of incentives and rewards that can influence which policies land on your kitchen table. So, who is really paying for all this? You are. It's not a separate fee, but the commissions and the money to fund those bonus pools are all baked into the price of your premium. When an insurance company calculates its rates, it factors in the cost of claims, the cost of running the business, profit, and of course the cost of acquiring you as a customer, which includes the agent's or broker's commission. That money isn't magic. Comes from the monthly payment you make. You're funding the entire structure. Understanding this isn't about vilifying agents or brokers. The vast majority are honest, hardworking people trying to do right by their clients. But they operate within a system of incentives that you need to be aware of. The captive agent is fundamentally loyal to their one brand, with their income directly tied to that brand's profitability. The independent broker has more flexibility, but they are a free agent playing a complex game, balancing relationships and bonus structures with multiple companies. Neither one is inherently good or bad, but their financial motivations are drastically different, and those motivations can ripple through every piece of advice they give you. Now you understand the invisible strings that pull on every interaction. You know how the money flows and where the potential conflicts of interest lie. The question is no longer just, who has the better price? It's whose advice can I truly trust? And how do you figure that out? How do you sit across from someone, a captive agent or an independent broker, and in just a few minutes determine if they're a true advocate for you or just a good salesperson for their own bottom line? Well, it turns out there are a few very specific, almost magical questions you can ask that will cut right through the noise. The answers they give, or more importantly, how they answer them, will reveal everything you need to know. And in the next part, I'm going to give you those questions. All right, get a pen, or open up the Notes app on your phone, because this is where the rubber meets the road. These aren't just questions. They are precision-engineered tools designed to reveal the character, competence, and agenda of the person on the other end of the line. Let's dive in. The first question you must ask is what I call the process probe. The biggest mistake people make is immediately giving their information and asking for a price. When you do that, you turn yourself into a number on a spreadsheet. You give them all the power. Instead, you need to flip the script and interview them first. So, the first thing you say is this: before we get into my personal details, can you walk me through your exact process for determining the right coverage for me, from start to finish? Now be quiet and listen. What you're doing here is testing whether you're talking to a professional advisor or a data entry clerk. A bad agent, a lazy broker, or someone just chasing a commission will sound flustered. They'll say something like, well, I just need your name, date of birth, and driver's license number to get started. That's a massive red flag. They see you as a lead to be processed, not a client to be advised. They want to plug your data into a machine, spit out the cheapest number, and move on. But a great agent or broker, their eyes will light up. They'll say, that's a great question. First, I don't even look at numbers. We'll spend about 15 minutes discussing your specific situation. We'll talk about who drives the cars, how you use them, your assets, your tolerance for risk, and your long-term financial goals. Once I have a clear picture of your life, I'll then approach several carriers that are a good fit for your profile. I'll come back to you with 2 or 3 options, and I'll walk you through the pros and cons of each one line by line, so you can make an informed decision. The price is the last thing we talk about, not the first. You see the difference? One is a transaction, the other is a consultation. This single question separates the pros from the amateurs before you've even told them your name. Okay, next. The second question is the negative space question. It's designed to combat the biggest sales tactic in the insurance world, focusing only on what's covered. Every salesperson is trained to highlight the benefits, but the real danger, the thing that can financially ruin you, is hidden in what's not covered. So, after they've presented a policy to you, you look them in the eye, or you say it with a firm tone on the phone and you ask this. This looks pretty comprehensive, but I'm more interested in the blind spots. What are the top 2 or 3 most common scenarios where a client like me might think they're covered by this policy, but they're actually not? This question is a pattern interrupt. It forces them to stop selling and start advising. A weak or dishonest person will squirm. They'll give you a non-answer like, "Oh, this is a platinum-level policy from a top-rated company. It has fantastic coverage. You don't need to worry." Wrong. That's an immediate disqualification. They're either incompetent and don't know the policy's weaknesses, or they're being deliberately evasive. A true professional will respect this question immensely. They'll pause, think, and give you a real honest-to-God answer. They'll say, "Okay, that's a fair question. With this specific policy, one thing to be aware of is its stance on business use. If you start delivering for a food app on the weekends, that's considered commercial use and this policy would deny the claim. You'd need a special endorsement for that." Another thing is off-road use. If you take your truck on unmaintained trails, any damage might be excluded. And finally, let's talk about custom equipment. An answer like that is pure gold. It proves they know the policy inside and out, it proves they have your best interest at heart, and it builds an incredible amount of trust. They aren't just trying to make a sale. They are trying to prevent a future disaster for you. Now for the third, and perhaps most uncomfortable, but necessary question. The money trail question. You have a right to know how the person advising you gets paid. Their compensation structure directly influences their recommendations. This is especially critical when dealing with an independent broker who represents multiple companies. You need to know if they're pushing a certain company because it's best for you, or because it pays them a higher commission. So, you ask politely but directly, "Just so I understand the whole picture, could you briefly explain how you're compensated? Is your commission percentage different depending on which insurance carrier I choose?" The reaction to this question tells you everything. A defensive reaction is a nuclear red flag. If they say, "That's not really relevant," or "We're not supposed to discuss that," or "It's very complicated," run. They are hiding something. It means there's likely a significant financial incentive for them to push you toward carrier A over carrier B, even if carrier B is a better fit for you. The trustworthy professional, on the other hand, will be an open book. They'll say something like, "Happy to clarify. I'm paid a commission by the insurance company, which is built into the price, so you don't pay me anything directly." To answer your specific question, most of the mainstream carriers I work with pay a very similar commission, usually between 10 and 15%. It's not different enough to sway my recommendation. My goal is to find you the right policy so you stay with me for years, because I only get paid if you remain a client. My loyalty is to you, not to any one company. That is the sound of transparency. That is the sound of someone whose business model is aligned with your best interests. Fourth, you need to ask the day after question. A lot of agents are your best friend during the sales process, but the moment you have a claim, they vanish. You're left alone to navigate a labyrinth of 1 to 800 numbers and faceless claims adjusters. You need to know what you're signing up for. So you ask, "Let's imagine it's 6 months from now. It's 10 p.m. on a Friday night and I've just been in an accident. Walk me through what I do next. Am I calling your personal cell phone? Your office? Or am I on my own, digging for a generic claims hotline?" This question cuts through all the marketing fluff about being in good hands and gets to the practical reality of their service. The bad answer is vague. "Oh, you'll get a welcome packet with all the contact information you need for the claims department." That translates to, "You're on your own, buddy." It means they are a salesperson, not a service provider. The great answer is specific, reassuring, and detailed. "You call my cell. I give it to all my clients. I don't care if it's a weekend or after hours. The first call you make is to 911, the second call is to me. I'll help you understand what to do at the scene, what to say, what not to say. And I will personally get the claim started with our dedicated agency liaison at the insurance company. I'll be your advocate from start to finish." This is the fundamental difference between buying a policy and hiring a professional. One is a product, the other is a relationship. This question reveals which one they are selling. Finally, the fifth question, the value justification test. It's inevitable that you'll see a cheaper quote somewhere else, probably online. You need to see how the agent or broker reacts to the competition. The goal here isn't to get them to lower their price. It's to test their professionalism and see if they can articulate their own value. You say, "I'm also looking at a quote from a big online company that's about $30 a month cheaper. I'm not asking you to price match, but I'm hoping you can look at this other quote and help me understand what specific differences in coverage or service might account for that lower price." A bad agent gets defensive. They'll start bad-mouthing the other company. "Oh, those guys are terrible, they never pay their claims," without offering any proof. Or they'll immediately cave and say, "Okay, well, maybe I can knock a few bucks off." This shows they don't have confidence in the value of what they're offering. A great agent sees this as an opportunity to educate you. They'll calmly say, "Sure, I'd be happy to. Can you send me that quote?" "Okay, I see it. The reason it's cheaper is they've quoted you with state minimum liability limits, which are dangerously low. They also have a much higher deductible on your collision coverage, and they've completely left off rental car reimbursement. If we were to make this an apples-to-apples comparison, our policy is actually less expensive. But more importantly, their quote leaves you with massive financial exposure. This is the expert you want on your side. Someone who isn't afraid of competition, who can clearly and calmly articulate value, and who focuses on protecting you, not just on selling you the cheapest piece of paper. These 5 questions are your Swiss Army knife. They will dissect any sales pitch and reveal the truth. They test for process, honesty, transparency, service, and value. Now you have the tools to interview any agent or broker and know within minutes if they are the right person to protect you and your family. So let's start by putting the traditional insurance agent under the microscope. When you hear the words insurance agent, you're likely picturing one of 2 very different professionals, and understanding this difference is the absolute key to making the right choice. These are the captive agent and the independent agent. Think of it like this: you need a new pair of running shoes. You could go to the Nike store, or you could go to a specialty running store that carries Nike, Brooks, Asics, and a dozen other brands. Both have experts, but their expertise and their ultimate goal is fundamentally different. First, let's walk into the Nike store. This is the world of the captive agent. A captive agent works for one and only one insurance company. Think of the big names you see advertised during the Super Bowl: State Farm, Allstate, Farmers, American Family. These agents are exclusive. They are, in essence, a franchise owner or a direct employee of that single massive brand. They are the ultimate specialists. Their entire career, their training, their product knowledge is laser-focused on the offerings of that one company. And there are some powerful advantages to this model. The first is deep, undeniable product knowledge. A great captive agent knows their company's policy documents inside and out. They know every single discount available, how to stack them, and the exact criteria you need to meet to get them. They understand the nuances of their company's claims process on a level that an outsider simply can't. They often have direct lines to underwriters and claims adjusters within their company, which can sometimes cut through red tape and get you answers faster. They are the company insider. When you work with a captive agent, you are getting access to a true specialist who lives and breathes that one brand. Furthermore, there's a sense of stability and consistency. You know the brand. You see the commercials. Their processes are typically standardized across the country. For many people, this is incredibly comforting. There are no variables. The agent is the local face of a giant, financially stable corporation. And because they're incentivized to bring all of your business under one roof, they are masters of the multi-policy discount. They can show you a clear, often compelling path to savings by bundling your home, auto, and maybe even a life insurance policy. But this specialization, this deep focus, is also its greatest weakness. It's a double-edged sword. The captive agent's toolbox contains tools made by only one manufacturer. If you need a Phillips head screwdriver, but all they have are flatheads, they will do their absolute best to convince you that a flathead screwdriver is what you really need. Their only solution to any problem is a product from their company. Let's apply our interview questions. You ask them about their process if your rates skyrocket after a claim. What can they do? The honest answer is they can reshop your discounts, see if you qualify for any new programs within the company, and maybe adjust your coverages. But what they cannot do is take your policy to the open market and see if Progressive or Nationwide or Travelers can offer you a better deal. They are, quite literally, captive to their brand. Their loyalty by design is to their employer. Their paycheck is signed by the very company that will be paying or denying your future claim. So when you ask them, "How can I be certain this is the best value for me in the entire market?" the only truthful answer they can give is, "I can't tell you that. I can only tell you this is the best value my company can offer you." This isn't because they are bad people. It's the simple reality of their business model. If you are a perfect fit for their company, a preferred driver with a great record, a nice home and a desire to bundle, you might get a fantastic deal and incredible service. But if your life changes if you get a speeding ticket, add a teenage driver or start driving for Uber, and you no longer fit that perfect profile, you might find yourself with a massive rate increase or even a non-renewal notice and your agent's hands are tied. They can wish you well, but they can't find you a new home. Now let's leave the Nike store and walk into that specialty running shop. This is the world of the independent agent. An independent agent is not an employee of any insurance company. Instead, they are an independent business owner who holds contracts or appointments with multiple insurance carriers. Dozens, sometimes even hundreds. They are not beholden to any single brand. Their primary allegiance is, in theory, to you, the client. Their superpower is choice. They are the market navigator. When you come to them for auto insurance, they don't start with a product, they start with you. They take your information, your driving history, your needs, and then they go to the market on your behalf. They submit your application to numerous carriers: Progressive, Safeco, Travelers, The Hartford, and many others you may have never even heard of. And they force those companies to compete for your business. The most significant advantage here is obvious. You get to see multiple options side by side. The independent agent can find the company that values you the most. Some companies are great for families with young drivers. Others specialize in drivers with a less than perfect record. Some offer unique coverages for classic cars or high-value vehicles. An independent agent's job is to know which company is the best fit for your specific situation and to find the most competitive price for the right coverage. If your rates go up with one company at renewal, an independent agent doesn't just shrug their shoulders. They can simply reshop your policy with all of their other carriers and move you to a new one, often seamlessly. They can be your agent for life, even if your insurance company changes every few years. They provide a layer of insulation between you and the whims of a single carrier. So let's apply our interview questions to them. When you ask about their process, you should say, "How many carriers do you plan to quote me with? Can I see the results from all of them? Not just the one you recommend." This tests their transparency. A great independent agent will have a clear, systematic process for shopping the market and will be happy to show you the comparisons. When you ask about honesty, you hit them with the tough question. Are you paid a higher commission by certain carriers? How do I know you're not just placing me with the company that pays you the most? This is a critical question. Most states have laws requiring them to act in your best interest, but it's a valid concern. A trustworthy independent agent will have a ready answer. They'll explain that commissions are broadly similar, and that their long-term success depends on retaining you as a happy client for years, not on making an extra 1% commission for a single year. A client who leaves after 1 year because they were placed with an overpriced or poor service company is a net loss for the agent. Their incentive is your retention. But the independent model isn't perfect either. The potential downside is captured in the phrase, "Jack of all trades, master of none." While a captive agent knows everything about one company, an independent agent knows a little bit about many companies. They may not have that same granular, institutional knowledge of every single company's internal claims process. Their relationship with any one carrier is also different. They are a partner, not an employee. They may not have the same direct line leverage with an underwriter that a captive agent who has been with their company for 25 years might have. And choice itself can be a double-edged sword. A lazy or inexperienced independent agent might just email you a spreadsheet with 10 different quotes and different coverage levels and say, "Which one do you want?" That isn't value. That's just data entry. The entire purpose of an independent agent is to be your expert consultant, to curate those choices, explain the differences in coverage that go beyond the price, and make a professional recommendation based on their market expertise. So we have two clear paths. The captive agent, a deep specialist, a company insider, offering stability and mastery of a single brand. And the independent agent, a broad generalist, a market navigator, offering choice and advocacy. On the surface, the choice seems obvious, doesn't it? More options are always better. The independent agent must be the superior choice for everyone. But if that were true, captive agents wouldn't exist. The reality is millions of incredibly smart people choose and stay with captive agents every single year, even when they know they could probably find a cheaper price elsewhere. Why? Because the decision isn't just about logic and numbers. It's about a powerful psychological trigger, a blind spot that can cause us to make a choice that seems safer, even if it's objectively worse for our financial well-being. It all comes down to a single powerful concept: brand trust. And in the next part, we are going to dissect how billion-dollar advertising budgets are engineered to exploit this trust, and how you can separate the genuine security from the manufactured illusion. Let's talk about the Super Bowl. Every year, for about 30 seconds, a handful of companies spend upwards of $7 million to get your attention. And year after year, a disproportionate number of those companies are insurance carriers. You see the ads, the quirky characters, the talking animals, the catchy jingles that burrow into your brain and refuse to leave. Have you ever stopped to ask yourself why? Why would a company selling something as mundane as auto insurance spend a fortune that could buy a fleet of private jets, just for half a minute of your time? The answer is not to sell you a policy. Not directly. Nobody watches a commercial with a clumsy football player and immediately picks up the phone to switch their car insurance. That's not the goal. The goal is something far more subtle, far more powerful, and infinitely more expensive. The goal is to build an empire of trust in your mind, brick by expensive brick. They are terraforming your subconscious. This is the science of manufactured familiarity. When you see that gecko or Flo from Progressive, or the Mayhem guy from Allstate, you're not just seeing an ad. You are participating in a multi-billion-dollar psychological operation designed to make a faceless, trillion-dollar corporation feel like a friend. They use humor to create positive association. They use repetition to create a sense of permanence and stability. They want their logo to be as familiar and comforting to you as the golden arches or the Nike swoosh. Why? Because when something bad happens, when you hear the crunch of metal and the shatter of glass, your brain doesn't have time for a logical, multivariable analysis of competing insurance products. It's in panic mode, and in that moment of crisis, your mind will instinctively reach for what is familiar. It will reach for the good neighbor you've been told is there. It will reach for the company that promises you're in good hands. It will reach for the brand that has spent billions ensuring its name is the first one that surfaces from the depths of your memory. This is the manufactured illusion, and the captive agent is its ambassador. When you walk into a State Farm or a Farmer's Insurance office, you are stepping onto a physical movie set for that brand. The logo on the wall, the branded pins on the desk, the agent's reassuring smile. It's all a continuation of the story that started with that $7 million Super Bowl commercial. The agent is the local, friendly face of the giant global machine. They are there to personify the brand trust that the corporation has spent decades and billions of dollars constructing. And let's be clear, this feeling of security is potent. Feels good. Feels safe. You're not just dealing with some random person. You're dealing with a representative of a massive, stable institution that you assume will be there for you when things go wrong. You're buying into the promise, the legacy, the sheer weight and permanence of the brand. But here is the critical question you have to ask. What is the price of that feeling? First, you pay for it literally. Every single dollar spent on celebrity endorsements, CGI geckos, and primetime advertising slots is a dollar that came from a policyholder. That massive overhead is baked directly into the premiums you pay. Part of your monthly payment isn't going towards your potential claim. It's going towards convincing your neighbor to also buy a policy. You are funding the very marketing machine that is designed to limit your own choices. Second, and far more importantly, you pay for it with a profound lack of options. The captive agent, for all their training and good intentions, operates within a gilded cage. Their entire world, their product list, their pricing structure, is dictated by one single company. They can be the most knowledgeable expert on that one company's policies, but their primary allegiance is by design and by contract to the brand they represent, not to you. Think about it this way. That friendly agent cannot, under any circumstances, tell you that a competitor down the street offers a nearly identical policy for 30% less. They cannot tell you that their company has a nasty reputation for fighting certain types of claims. They cannot tell you that another carrier offers a specialized endorsement that would perfectly cover your unique situation. An endorsement their company doesn't even have. To do so would be professional suicide. Their job is not to find you the best policy on the market. Their job is to find you the best policy within their company's limited catalog. They are selling from a single brand store in a world that looks like a giant shopping mall. This is where the entire model begins to diverge from the broker. An independent broker doesn't have a billion-dollar brand behind them. They don't have a mascot or a jingle. When you walk into a broker's office, you won't be overwhelmed by the logos of one single giant company. In fact, their brand is nothing more than their own name, their own reputation, and their own expertise. The trust they build isn't manufactured in a boardroom on Madison Avenue. It's earned client by client, year after year, through performance and advice. Their business model is fundamentally different. They don't start with the product and try to find a customer for it. They start with you, the customer, and then they scour the entire market to find the right product to fit your needs. Their allegiance isn't to a single carrier. It's to the client who pays them. This isn't just a philosophical difference. It is a structural one that changes everything. Let's use that TV analogy again. A captive agent is the expert salesperson at the Sony store. They are passionate about Sony. They know every feature of every model. They can tell you why the Sony processor is superior and why their warranty is the best. And they will sell you a fantastic Sony television. But if you ask them if the new LG model is a better value, they will, at best, change the subject. At worst, they'll denigrate the competition. They cannot and will not sell you an LG, even if it's the perfect TV for you. The independent broker is the professional reviewer from Consumer Reports. They have no skin in the game with Sony or LG or Samsung. They've tested them all. They know which one has the best picture for cinema, which one is best for gaming, and which one offers the best all-around value for a family on a budget. Their only goal is to use their comprehensive market knowledge to give you the best possible recommendation for your specific situation. They don't care which brand you buy, as long as it's the right one. This is the core distinction. Are you buying a brand, or are you buying a solution? Are you paying for a feeling of familiarity created by advertising, or are you leveraging the expertise of a professional who has access to the entire marketplace? The captive agent leverages the power of a manufactured brand. The broker leverages the power of unbiased choice. One path offers the comfort of a familiar name. The other offers the tangible power of genuine competition. So we've peeled back the curtain on the marketing machine. We see the difference between a brand promise and a market solution. But what happens when you actually sit down to get a quote? What are the hidden questions, the subtle manipulations, and the critical details that a captive agent might gloss over, but a broker is trained to expose? That's where we're going next, into the real-world mechanics of how your policy is actually built, and how the person you choose to build it can be the difference between security and disaster. Let's pull back the curtain on how an insurance policy is actually born. Think of it like building a house. You can buy a prefabricated kit home, or you can hire an architect to design a custom home from the ground up. Both will give you a roof over your head, but the process, the materials, and the final result are worlds apart. And one is far more likely to withstand a storm. When you walk into a captive agent's office, you are, in essence, looking at kit homes. The agent is a master builder, but they only have access to one brand of kit. Let's call it Allstate Construction or Farmers Lumber. They know their kit inside and out. They know every floor plan, every standard feature, and every optional upgrade their company offers. The process is incredibly efficient. They take your information, your address, your car, your driving history, and they plug it into their company's sophisticated software. The software, which has been designed by the insurance company for maximum efficiency, crunches the numbers and spits out a few pre-packaged options. It's the classic good, better, best model. The good package gives you the state minimums. The better package adds comprehensive and collision. And the best package throws in some higher liability limits and maybe rental car reimbursement. The agent explains these three options, helps you pick one, and you're on your way. Feels simple, feels easy, but the danger lies in what wasn't asked, what wasn't considered, and what wasn't offered. The agent's entire system is designed to fit you, the client, into one of their pre-existing boxes. If your life is a perfect square and they sell square boxes, you're in luck. But what if your life is a little more complex? What if you're a trapezoid? The captive agent's job is to make you fit. They might shave off a corner here, or ignore a unique angle there, just to get you into the box their company provides. They aren't doing this to be malicious. Their toolkit is simply limited. They can't sell you a Ford engine at a Toyota dealership. They can only offer you what's on their lot. This leads to critical, often invisible, gaps in your protection. For example, do you have a custom stereo system or expensive rims on your car? The agent's standard best package might only cover $1,000 of custom equipment. If you have $5,000 invested, That's a $4,000 gap you won't discover until your car is broken into. Did the agent ask you about it? Probably not, because custom equipment isn't a primary question on their standard intake form. Their job is to sell the package. Now let's contrast this with the broker. The broker is the custom home architect. When you sit down with a broker, you don't start by looking at pre-drawn floor plans. You start with a blank piece of paper. The broker's first job isn't to sell you anything. It's to understand you. They conduct what's called a risk analysis. It's a deep diagnostic conversation. They're not just an order taker. They are a risk consultant. They'll ask the standard questions, of course, but then they go deeper. Tell me about your commute. Do you ever use your car for work? Even just to visit a client or run a business errand? Who else lives in your household? Do they have access to your keys? What are your assets? Do you own a home? Have significant savings? What are we trying to protect if you cause a catastrophic accident? What is your biggest financial fear when it comes to a car accident? This discovery process is the broker's superpower. They are building a complete blueprint of your life and your risks before they ever look at a single insurance product. Once they have that blueprint, they don't go to one lumber yard. They go to the entire market. They take your unique needs to dozens of different insurance companies, the big national brands, smaller regional specialists, and everything in between, to find the right components to build your custom protection. Let's make this real. Meet Sarah. Sarah is a freelance photographer. She goes to a captive agent for her car insurance. The agent runs her info, sees a clean record, and sells her their gold package. It has good liability limits, a decent deductible. The price is reasonable. Sarah leaves feeling protected. She is, in fact, dangerously exposed. A few weeks later, Sarah goes to a broker for a quote on her renter's insurance. The broker, doing their due diligence, asks to review her auto policy as well. The broker starts asking those deeper questions. First, Sarah, I see you're a photographer. Do you ever transport your camera gear in your car? Sarah says, of course, all the time. My main camera bag is worth about $10,000. The broker's eyes widen. He explains that her auto policy's coverage for personal effects is capped at $500, and it likely excludes property used for business purposes altogether. That gold package the agent sold her is worthless for her most valuable asset. Second, the broker asks, do you ever use your car to drive to photo shoots or meet clients? Sarah says, yes, that's a huge part of my job. The broker then delivers the second blow. Because she's using the vehicle for business, a claim could potentially be denied. If she gets into an accident on the way to a wedding shoot, her personal auto policy carrier could argue it was commercial use and refuse to pay, leaving her personally liable for all damages. Third, the broker asks, does anyone else ever drive your vehicle? Sarah mentions her roommate occasionally borrows it to run to the store. The broker explains the concept of permissive use. He points out that the specific carrier her agent placed her with has a very restrictive clause. If her roommate, who has a fender bender on her own record from 3 years ago, were to cause a major accident in Sarah's car, the insurance company could claim Sarah failed to list a regular operator and deny the claim, launching a lawsuit against both Sarah and her roommate. In one 15-minute conversation, the broker identified 3 potential financial time bombs in Sarah's life. Bombs the captive agent streamlined, package-based process never even looked for. The broker then built a proper solution. They found a carrier that offered a business use endorsement on her personal auto policy. They sourced a separate, inexpensive inland marine policy to cover her $10,000 in camera gear anywhere in the world. And they moved her to a carrier with a much broader definition of permissive use, fully protecting her from her roommate's driving. The policy the broker built was slightly more expensive, but it was the difference between a house of cards and a brick fortress. This is the core mechanical difference. The agent's process is built around the product. The broker's process is built around the client. Gets even more granular. Let's talk about repairs. After an accident, does your policy require you to accept cheaper, aftermarket parts, or does it guarantee original equipment manufacturer? OEM, parts from the factory? For a new or high-end vehicle, this can make a massive difference in performance, safety, and resale value. A captive agent, representing a company that defaults to aftermarket parts to save money, is unlikely to even bring this up. A broker, comparing policies from 5 different carriers, will highlight that Carrier A offers an OEM endorsement while Carrier B does not, allowing you to make an informed choice. Or consider something called stacking of uninsured motorist coverage. In many states, if you have multiple cars, you can stack the coverage from each car. If you have $100,000 of coverage on 3 cars, you could potentially have $300,000 of protection if you're hit by an uninsured driver. It's a hugely valuable feature. But many companies, especially some of the big direct brands, don't offer it. Their agents will never mention it because they can't sell it. A broker knows which companies offer it and will present it as a strategic way to build a wall of protection around your family. This is the real-world mechanic of building a policy. It's not about just picking a liability limit and a deductible. It's about a deep understanding of policy language, endorsements, exclusions, and how different corporate structures treat their customers at the moment of truth. The agent sells you the kit home their company designed. The broker is the architect who designs a home specifically for your life, and then finds the best builders to construct it. So the broker's process is clearly more thorough, more customized. But does that thoroughness come with a hidden cost? Are you paying more for this white glove service? And most importantly, when disaster strikes and you actually have to file a claim, whose side are they really on? Who is going to fight for you when the insurance company starts playing hardball? That is the ultimate test, and it's exactly where we're going next. When the worst happens, the screech of tires, the sickening crunch of metal, the piece of paper your policy is printed on suddenly becomes one of the most important documents in your life. The promises made in a comfortable office or over a friendly phone call are now being put to the fire. And the person who sold you that policy, their true role is about to be revealed. Let's imagine this scenario. We'll call our driver Sarah. She's a responsible driver, pays her premiums on time, has a great record. One afternoon, a car blasts through a red light and T-bones her sedan. The other driver is clearly at fault, there are witnesses, even a police report. Seems open and shut. Her car is totaled, and while she's thankfully not seriously injured, she's got some nasty whiplash and bruising that will require physical therapy. This is the exact moment insurance was invented for. First, let's play this out with Sarah having a captive agent. Let's call him Bob from All American Mutual. Sarah calls Bob, shaken but relieved she has someone to turn to. Bob is fantastic on the phone. He's sympathetic, he's reassuring. He says all the right things. Sarah, I'm so sorry this happened. The most important thing is that you're okay. Don't worry, we'll get this all sorted out. He helps her get the claim number, gives her the direct line to the claims department, and tells her an adjuster will be in touch. Sarah hangs up feeling like she's in good hands. But then a week later the cracks start to show. The adjuster from All American Mutual calls. The tone is different. It's not warm and friendly like Bob. It's clinical, detached. They offer her a settlement for her totaled car that seems low. Shockingly low. She looks up the value of her car on Kelley Blue Book and other sites, and the offer is thousands of dollars less than what it would cost to buy a comparable vehicle. When she questions it, the adjuster gives a vague explanation about regional market value adjustments and condition assessments. Next, they start questioning her medical treatments. Are you sure you need 12 sessions of physical therapy? Our review suggests 6 should be sufficient. They're nickel-and-diming her at every turn. Frustrated and stressed, Sarah calls Bob, her agent. Bob, she says, your claims department is lowballing me. They're not being fair. Can you do something? And this is the moment of truth. Bob listens, he sympathizes again. He says, I understand your frustration, Sarah. Let me make a call and see what I can find out. He calls her back a day later. So, he begins, I spoke to the adjuster's supervisor. They stand by their valuation. Unfortunately, the claims department is a completely separate division. They have their own protocols and I don't have any authority over their decisions. My hands are tied. Think about what just happened. Bob is a good guy. He wants to help Sarah, but he can't. His legal and financial obligation is to his employer, All American Mutual. He is an agent of the company. His job is to represent the company's interests to Sarah. He cannot and will not act as an advocate for Sarah against his own company. Doing so would jeopardize his career, his bonuses, his entire livelihood. He's a sales and service representative, not a legal advocate. Sarah is now on her own, fighting a multi-billion-dollar corporation, feeling betrayed by the very person she trusted to protect her. Now let's rewind. Same accident, same totaled car, same injuries. But this time, Sarah has an independent broker. Let's call her Diane. Sarah calls Diane just as shaken. Diane's response starts the same, sympathetic, reassuring, but then it pivots. Sarah, I'm so glad you're okay. Listen to me. Do not talk to the other driver's insurance company. Do not give a recorded statement to anyone yet. I am going to report this claim to your carrier right now. From this point forward, you can direct all communication through me. I will be your primary point of contact. Let me handle the adjuster. The difference is immediate and profound. Diane isn't just giving Sarah a phone number to a call center. She is positioning herself as Sarah's shield and her advocate. She works for Sarah, not the insurance company, the adjuster from the exact same insurance carrier. Let's say Diane had placed Sarah with All-American Mutual, calls with the same lowball offer for the car. But they don't call Sarah. They call Diane. Diane, having already done her own research, is prepared. She doesn't get emotional. She gets factual. Thanks for the initial offer, she says. But we're not going to be able to accept that. I've pulled comps from 3 different valuation services for this exact year, make and model in Sarah's zip code, and the average replacement cost is 22% higher than your number. I'm sending you the documentation now. Please provide a revised offer that reflects the actual market value. When the adjuster questions the physical therapy, Diane is ready for that too. Her doctor, a licensed medical professional, has prescribed this course of treatment. We have the medical records to support it. To disregard a doctor's orders would be acting in bad faith, and it could expose the company to much greater liability if her condition worsens due to inadequate care. Let's approve the prescribed treatment so we can get our mutual client back to 100%. See the shift in power? Diane is speaking the adjuster's language. She understands the industry's rules, both written and unwritten. She knows what constitutes bad faith. She knows how to build a case. She isn't just a friendly face. She's a seasoned professional who has dealt with hundreds of claims from dozens of different companies. She knows their playbooks. The adjuster recognizes they aren't dealing with a stressed, emotional victim they can push around. They're dealing with a professional peer who can, and will, escalate the issue if necessary. In this scenario, Sarah is insulated from the most stressful parts of the process. She's not arguing with adjusters. She's focusing on her recovery and shopping for a new car with the fair settlement Diane negotiated for her. Diane's value wasn't in getting Sarah the cheapest price by a few dollars a month. It was in delivering on the promise of the policy when it mattered most. Her incentive is completely aligned with Sarah's. If she gets a great result, Sarah remains a loyal client for life and tells all her friends. If she fails, she loses that client and damages her reputation. Her entire business model is built on client advocacy. So when we ask whose side they're on, the answer becomes painfully clear. The captive agent works for the insurance company. They are paid by the company, trained by the company, and their ultimate loyalty is to the company. They are the company's representative to you. The independent broker works for you. Their legal, fiduciary duty is to represent your best interests. They are your representative to the insurance company. One is a salesperson, the other is an advisor and an advocate. It's the difference between having a customer service rep and having a lawyer in your corner. So while the broker clearly wins the war when it comes to a major claim, what about the everyday battles? The simple service requests, the billing questions, the need for speed and convenience when you just want to add a new car to your policy at 9 o'clock on a Friday night. Is one system built better for the daily grind of managing your policy? That's where the story takes another surprising turn. When you sign on the dotted line, you're not just buying a policy. You're entering into a relationship. And like any relationship, the real test isn't the first date. It's the Tuesday night when the plumbing breaks. For your insurance, that's the day-to-day management, the little things that become big things. It's adding a new driver, changing your address, or just trying to understand a weird notice you got in the mail. And this is where the fundamental structures of the captive agent and the independent broker create two vastly different realities for you, the customer. Let's start with the captive agent. Think of them as a specialist, a master of a single domain. They work for one company, State Farm, Allstate, Farmers, and they live and breathe that company's ecosystem. Their entire professional life revolves around one set of rules, one software platform, one underwriting department, and one claims process. When you need something done, this can be an incredible advantage. Imagine this scenario. It's 6 p.m. on a Saturday. You and your spouse just spent 4 grueling hours at a car dealership, and you finally bought a new SUV. The finance manager slides a pile of papers toward you and says, "I just need a copy of your new insurance card showing this vehicle is covered, and you can drive it home." Panic starts to set in. Your insurance agent's office is closed, but you have a captive agent. Let's call her Jessica. You call her cell, which she gave you for emergencies. She answers. You explain the situation. For Jessica, this is routine. She pulls out her tablet, logs into her company's proprietary agent portal, a system she uses 100 times a day. She knows every shortcut, every drop-down menu. She inputs the vehicle's VIN, selects the coverages to match your current policy, and hits submit. Because she is a direct employee, the system is designed to trust her inputs and bind coverage instantly. Within 3 minutes, a new, official insurance ID card is generated and sitting in your email inbox. You forward it to the finance manager, and you drive your new car off the lot. It's seamless. It's fast. It's a well-oiled machine where your agent is a trusted cog. This is the captive model at its absolute best. Hyper-efficient execution within a closed system. But what happens when that system has a weakness? What if their mobile app is clunky and never works? What if their website for paying bills is a nightmare to navigate? What if their company policy for adding a teenage driver involves a mountain of paperwork? You're stuck. Your captive agent can apologize. She can try to walk you through it. But she cannot offer you an alternative. She can't say, yeah, our app is terrible, let me put you on this policy from another company that has a great one. You are locked into that single company's way of doing things for better or for worse. The strength of specialization is also its greatest limitation. Now let's rewind. Same scenario, same new SUV on a Saturday night. But this time you have an independent broker, we'll call him David. You call David. He also answers. But his process is fundamentally different. David doesn't work for your insurance company. He works for you. He represents a dozen different carriers. So when you ask him to add the car, his first step isn't to open a single app. It's to figure out which of his 12 carriers you're actually insured with. Hey, it's Progressive. He now has to log into the Progressive agent portal. This is a system he uses, but it's one of many. He might not know its every little quirk like the back of his hand. He enters the VIN, but this particular portal has a security feature that flags new vehicle additions on weekends for a manual review on Monday. Or maybe the portal is down for scheduled maintenance. Or maybe it requires a photo of the bill of sale that you don't have with you. Suddenly, that 3-minute process becomes a 30-minute headache, or worse, impossible until Monday morning. The broker is a middleman and intermediary. That means there's an extra layer between you and the company, and that layer can sometimes create friction or delays. He's a jack of all trades, navigating many systems but a master of none. So the captive agent wins on day-to-day convenience, right? Not so fast. This is the surprising turn. Let's look at the flip side of that exact same interaction. Let's say the insurance company's system automatically flags your new, expensive SUV and wants to increase your premium by a shocking amount because of its high-risk profile. If you have Jessica, the captive agent, she sees the rate increase. She can argue with her own underwriting department. She can try to explain the context. But at the end of the day, she works for the company that wants to charge you more money. Her power is limited by her employment. She is fundamentally on their team. Now consider David, the independent broker. He sees the outrageous premium increase from Progressive. His reaction is completely different. He doesn't just work for you. His income depends on keeping you as a happy client. He gets on the phone not with an internal underwriter, but with his regional sales rep at Progressive, a person whose job is to keep brokers like David happy. He says, listen, this rate for my client is insane. They've been with you for 5 years with no claims. If you can't do better, I'm moving their auto, home, and umbrella policies over to Safeco this afternoon. I've already got a quote from them that's 30% lower. This is a conversation a captive agent can never have. The broker is wielding the power of the free market on your behalf. He's holding your business hostage to get you the best deal. 9 times out of 10, the company will find a way to fix the premium. And if they don't, he simply clicks a few buttons and moves you to the better priced option. The friction of being a middleman in peacetime becomes the leverage of being a mercenary in wartime. He is on your team. This dynamic becomes even more critical when it comes to the single most common frustration in insurance: renewal time. Let's say you get your renewal notice, and your premium has jumped by 25% for no apparent reason. You call Jessica, your captive agent. She'll be sympathetic. She will say all the right things. She'll explain that rates are up across the state, that inflation is affecting repair costs, that her hands are tied. She'll double-check your discounts. Maybe she can find an extra 2% by bundling your pet insurance. But at the end of the call, the 25% increase is still a 23% increase. Her only real solution is for you to accept it, or for you to leave and go do all the work of shopping for new insurance yourself. Now, you call David, your independent broker, with the same news. He doesn't give you excuses, he gives you a plan. He says, "That's unacceptable. Let me take a look." He already has all your information in his system. He submits your profile to the other 11 carriers he represents. The next day he calls you back. "Okay, I've got 3 options for you. We can stay with your current carrier and they can suck it up. Or I can move you to Travelers for basically the same price you were paying last year. Or there's a smaller regional company called Erie that will give you even better coverage for 10% less, but their claim service is a bit slower. What do you want to do?" This is the broker's superpower. He absorbs the single most painful part of being an insurance customer: the endless, agonizing process of reshopping your policy every year or 2. He does it for you proactively. With a captive agent, your loyalty is to a brand. With a broker, his loyalty is to you. He knows that if he can't keep you happy with a competitive rate, you'll find another broker who can. The entire economic incentive is flipped on its head. So the choice in day-to-day management isn't about speed versus slowness. It's a choice of philosophy. The captive agent offers streamlined integration. It's the Apple ecosystem. Simple, clean, and incredibly efficient, as long as you play by their rules and are happy with their products and pricing. The independent broker offers market-driven advocacy. It's the Android model. More choice, more customization, and a powerful advocate working on your behalf, even if it means navigating a few different menus or a bit of occasional system friction. But knowing all of this, the claims process, the pricing structure, the daily management, still leaves one giant unanswered question. Because at the end of the day, these are just systems, just models of business. The experience you actually have comes down to the human being on the other end of the phone. A brilliant, dedicated captive agent is infinitely better than a lazy, unresponsive broker. And a sharp, proactive broker is a world away from a captive agent who is just phoning it in. The final, and arguably most important piece of this puzzle is not which system you choose, but who you choose. How do you find the great ones and avoid the bad ones? What are the telltale signs of a true professional versus someone just trying to make a quick commission? That's the last piece of the code we need to crack. And cracking that code starts with a fundamental shift in your mindset. You are not just buying a product. You are hiring a professional. Think about it. You wouldn't hire a lawyer, an accountant, or a doctor based on who has the flashiest billboard or the cheapest hourly rate. You'd look for expertise, for trust, for someone who has your best interests at heart. Your insurance professional is no different. They are the financial first responder who shows up when your world is turned upside down. You are hiring them for the worst day of your life, so you better be sure you're hiring the right person on your best day. So let's build your toolkit. Let's talk about the green flags, the unmistakable signs that you're dealing with a true professional, an advisor, not just a salesperson. The first and most important green flag is this: they are an educator first. A great agent or broker doesn't just throw numbers at you. They take the time to explain what those numbers mean. They'll break down liability limits, not just saying you should have 250/500, but explaining why. They'll tell you a story about a client who was underinsured and the financial devastation it caused. They'll explain what uninsured motorist coverage actually does and why. In a country where 1 in 8 drivers has no insurance, it might be the most important coverage you buy. If you leave the conversation feeling smarter and more confident about your insurance, that's a massive green flag. The second green flag is a thorough needs analysis. A commission chaser asks, "What kind of car do you have and what's your address?" An advisor asks, "Tell me about your life." They'll ask about your job and your commute. Do you use your car for work? They'll ask about your assets. Do you own a home? Do you have a significant savings or investment portfolio? They're not being nosy. They're trying to figure out how much you have to lose in a lawsuit. They'll ask about your family. Do you have young drivers? Are you planning on having kids? They are building a complete picture of your financial world to wrap the right blanket of protection around it. If the conversation feels more like a financial checkup than a sales pitch, you're on the right track. Third, they present options and explain the trade-offs. Even a captive agent, who only represents one company, can show you different tiers of coverage. A true pro will lay it all out. They'll say, "Okay, here is the state minimum policy. It's the cheapest, but let me be clear, this is a financial gamble. One moderate accident could bankrupt you. Now here is the good option. Protects you reasonably well in most situations. And here is the best option. This is the fortress. This is the policy I would sell to my own brother, because it's designed to protect your assets and your future. They empower you to make an informed decision by explaining the real-world consequences of each choice, rather than just pushing the one that's easiest to sell. Fourth, look for social proof and a commitment to their craft. Check their Google reviews. Are they recent? Are they detailed? Do they talk about the agent's service and knowledge, or just the price? A long history of glowing specific reviews is a powerful indicator. Also, look for letters after their name. Designations like CIC, Certified Insurance Counselor, or CPCU, Chartered Property Casualty Underwriter, are the equivalent of a master's degree in insurance. It means they've invested hundreds of hours in advanced education. It shows they see this as a profession, not just a job. Now let's flip the coin. Let's talk about the blaring, siren-wailing red flags that should have you running for the door. The biggest red flag of all is when the entire conversation is about one thing: price. If the first words out of their mouth are, "How much are you paying now? I can beat it," hang up the phone. They have no idea if your current policy is garbage. They don't know if you're dangerously underinsured. They are not trying to protect you, they are trying to hit a sales quota. Price is a component of the decision, yes, but it should be the last thing you discuss, after your needs have been fully understood and the proper protection has been designed. The second red flag is being rushed. If you feel like you're on a conveyor belt, being pushed toward a quick signature, that's a problem. A true professional allocates time for you. They encourage questions. They want you to understand. Someone who is rushing you is likely glossing over important details, or they're just trying to maximize their call volume for the day. Your financial security is worth more than a 7-minute phone call. A third, and very dangerous red flag is when they normalize state minimums. If an agent or broker presents a state minimum policy as a great, affordable option, without explicitly detailing the catastrophic risk you are taking, they are committing professional malpractice in my book. They are knowingly selling you a policy that will not protect you in a serious accident. They are setting you up for financial ruin just to make a sale. A pro will sell you what you need, even if it means telling you a hard truth about what that costs. Fourth, they're evasive or can't explain things clearly. If you ask, "What's the difference between comprehensive and collision?" and they give you a fuzzy, jargon-filled answer, it means one of two things. Either they don't know, or they don't care enough to make sure you know. Both are disqualifying. This is your money and your protection. You have a right to understand it in plain English. So, how do you put this all into practice? You conduct an interview. Remember, you are hiring them. Prepare a short list of questions and treat your first call as a screening process. Here are a few you can steal. Start with this: what is your process for helping a new client like me figure out the right amount of coverage? Listen carefully. Are they talking about your life, your assets, and your risks? Or are they talking about their quoting software? Then ask, what happens when I have a claim? Who is my first call? And what role do you play in that process? A great professional is your advocate. They'll guide you, they'll check in, they'll help you navigate the claims department. A bad one will just give you an 800 number and say, "Good luck." Ask this crucial question: how often do you proactively review your client's policies? The answer should be, at minimum, once a year or every other year. Life changes. You get a raise, you buy a house, your kid starts driving. Your insurance needs to evolve with you. An agent who just sells you a policy and disappears is not an advisor. They're a transaction taker. And finally, my personal favorite test. Can you explain to me what subrogation is as if I were a 10-year-old? This tests their technical knowledge and their ability to communicate. If they can take a complex insurance concept and make it simple, you found a teacher. You've found a true pro. So where do you find these people? The single best way is through a referral from someone you trust who has had a good experience, especially if they've gone through a claim. Ask your financial advisor, your mortgage lender, or your accountant who they trust. These professionals deal with insurance constantly and they know who the good operators are. Failing that, a simple search for a highly rated independent insurance agent in your town is a great starting point. Then use this script. Interview at least 2. See who makes you feel more confident, more educated, and more secure. In the end, the debate of agent versus broker is secondary. The captive agent who takes an hour to build the perfect policy for your family is infinitely better than the independent broker, who just finds you the cheapest, bare-bones option from one of their 20 carriers. The real choice isn't between business models. It's between a professional advisor who builds a shield to protect your family's future and a salesperson who just sells you a piece of paper. Your insurance policy is one of the most important documents you will ever own. It's a promise that if the unthinkable happens, you can rebuild. Don't leave that promise in the hands of the person with the catchiest jingle or the lowest price. Put it in the hands of a professional you have vetted, you have interviewed, and you trust. Take the time to find that person. It is the single best investment you will ever make in your own peace of mind.